Hello and welcome, grade 11 accounting students. I'm sure you guys are busy preparing for your exam, and in today's lesson we're going to try and help you as much as we can. So remember guys, I expect you to work with me, and as usual I'm reminding you to have pen and paper in front of you as well as your calculator. So let's begin. Right, what exactly are we going to be revising? We're going to be looking at a question which focuses on manufacturing accounts as well as VAT. So in other words, we're going to be looking at one question which will test your understanding of both manufacturing as well as value-added tax. So let's begin. Right, I'm going to start by looking at the information given, and then we're going to go to the actual questions. So the information that is given to us, the information below was extracted from the records of Mix and Match Colors, a business which manufactures paint. The business uses a markup of 100% and their financial year ends on the 28th of February. Okay, so guys, very, very important. In the information that I've just read out, they've given me markup as well as the financial year end. So remember, when you are reading through your exam paper, and this is absolutely important, while reading, use your pen or your highlighter and highlight the necessary or the important information. Right, so I'm not going to look at the required just yet, but let's go to the information. So I am given my balances for 28th of Feb 2014, as well as my balances for the 28th of Feb 2015. So immediately, guys, 2015 would be my closing balances at the end of the financial year, and 2014 would be balances at the beginning of the financial year. In other words, my opening balances. So in other words, if I had to draw up a timeline, my financial year starts on the 1st of March 2014. So obviously the balances at the end of February 2014 becomes my opening balances. And then the end of the year, 28th of Feb 2015, this would represent closing balances. Okay, so I'm given balances, and we'll obviously look at this in more detail when we get to the actual question. So if I scroll down, I'm also given summary of transactions for the year ended 28th of Feb 2015. So in other words, for the entire year, I'm given a list of transactions. And once again, we'll look at this in more detail as we complete the questions. Okay, so there's the list of my transactions for the year. Then on the next page, I've got additional information. And once again, I'm going to read through this information, probably not in much detail, but simply to highlight the key elements that will get affected by this particular information. So the first one, the business purchased a dye from France, which is used to manufacture a new color paint. Used to manufacture a new color paint. So immediately, guys, this adjustment, I'm not going to read further, but this particular adjustment is going to impact on my direct materials. Remember the difference between direct materials and indirect materials. Direct materials used directly in the manufacturing process. So this particular business makes paint, and obviously the dye, which is for the color of the paint, is used directly in the manufacturing process. So all of this information is going to impact on direct materials. Right, next bit of information. During my physical stock take, or during the physical stock taking of raw materials, on the 28th of Feb 2015, a calculation error was made. So again, I'm not really worried about the error itself at the stage, but again, the word raw materials immediately tells me that this is going to impact on the calculation of direct materials, or if I had to complete the raw material stock account. Right, next bit of information. The accountant the senior accountant discovered that the accountant forgot to take into account the UIF contributions and pension contributions made by the business for the month of February 2015. The business contributions were as follows. So again, once more, this bit of information, production wages will obviously impact on direct labor. And the factory foreman, remember, he obviously is not involved in making the product or manufacturing the product. He walks around, he checks that everything is being done. So this will impact on indirect labor or factory overheads. Okay, right, next bit of information. This is where the VAT comes in. An amount of 27,360 Rand, including VAT, was still outstanding for February 2015's water and electricity account. So again, not reading further. So this will impact on factory overheads. Right, next bit of information. Included in the sundry factory expense total is a deposit paid for the hire of special machinery, 5,000 Rand. So again, this bit of information will impact on factory overheads. And I think that everything else, okay, you guys need to just take my word for it because I'm going to go through this in much more detail as we complete the accounts. But the next bit of information, factory equipment, depreciation, insurance, okay, all of this is going to impact on factory overheads. Okay, right, I've got a feel for the information. Now let's go to the actual question itself. Okay, so the very first question, okay, we are going to calculate. Okay, so the first question, calculate the amount of raw materials and consumables that were used for the production of 2015. You may draw a T account as part of your calculation. Now, they often do this in grade 12. I know you guys are in grade 11, but remember the grade 11 syllabus is obviously continued in grade 12, or it's regarded more or less as one syllabus, grade 11 and 12 combined. So when we talk about raw materials used, remember, I can use a T account or a ledger account to help me how much of raw materials were used in the production process. So which ledger account is going to help me calculate this figure? It's going to be my raw material stock account. Okay, so raw material stock account, we all know this is an asset. On the debit side, an asset decreases. On the credit side, an asset, on the debit side, it increases. On the credit side, it decreases. Right, so if I complete this particular account, I'm then able to calculate the raw materials that were used. Not necessary for you to do a T account. You can do this by means of a calculation, but as accounting students, remember, we are comfortable with the general ledger. So let's start with this particular account, raw material stock account. So I'm going to start off with my opening balance. Okay, so at the beginning of the year, my opening balance, so if I go back to my information sheet, okay, so my raw material stock had an opening balance of 403,650. So let's take that through. 403,650. Okay, so 403,650. So I've got my opening balance. Right, the next bit of information I need is how much of raw materials were purchased during the year. Now remember guys, that when you are doing a T account as a calculation, the examiner is not really interested in your details because you're not forced to do a ledger account. But what's important is obviously the amount. So I'm not going to worry too much about the contra accounts, folio reference. I'm just going to fill in the amounts. Right, so let's look at raw materials purchased for the year. So if we go back to our summary of transactions, so my purchase of raw materials, 990,000. So let's take that through. Okay, so 990,000. Okay, that's how much of raw materials were bought during the year. And remember, the more you buy, obviously the more you have. So hence it's going on the debit side. Right, what else goes on the debit side? The carriage on purchases, because remember, if you pay for carriage on raw materials, the value of your raw materials is going to increase. So let's go back to our summary, okay, of transactions. Did we pay carriage? Okay, so carriage on purchase of raw materials, an amount of 85,000 Rand was paid. So let's take that through as well. So on the debit side of this account, 85,000, and remember this represents the carriage on purchase. Right, what else is going to go on the debit side? Let's now see whether there are any additional entries that were not taken into account. So let's go to our additional information, and the very first bit of additional information affects the direct materials used. So let's now read this information carefully. The business purchased a dye from France, which is used to manufacture a new color paint. The order was processed and the stock arrived on the 26th of February 2015. Right, I hope you guys got this part already. So let's carry on. The total cost amounted to 1,100 euros. The exchange rate was 19 Rand for 1 euro, so they're giving me the exchange rate. Custom tax amounted to 5% of the total value of dye purchased. And then very, very important, no entry has been made for this transaction. Right, so in other words, this particular transaction is regarded as an additional purchase. And because we haven't entered this in our records, we obviously need to take this into account. So let's start by firstly calculating what is our value of the purchase from France, okay, in terms of the Rand value, and then what is the additional cost with regards to the custom tax or custom duty that the business has to pay. Okay, right, not difficult because they're giving me the exchange rate. So in terms of the cost in euros, okay, the dye costed 1,100. To convert this to rands, I'm multiplying by 19, and the total value of the purchase in South African currency or in rands, 20,900. Okay, you guys got that. Right, the custom tax, obviously you guys are aware of custom duties, import duties. So your custom tax amounts to 5%, let's just move that, 5% of the total value of the dye purchased. So that's the value. 5% is the additional tax that the business has to pay. So the custom tax, 1,045 Rand. So custom tax, 1,045. Okay, you guys with me? Right, so let's now take this information through to our answer booklet. The additional purchase, 20,900 first. So let's do that. So the additional purchase, 20,900. And then the tax, which amounted to 1,045, also increases the value of your stock. Okay, so I've got 1,045. Right, I haven't come to the end of this question because I haven't calculated as yet how much of raw materials were used All I'm calculating thus far is how much I have available, but not how much I've actually used. So I think let's take a quick break so you guys can obviously go back to this, make sure you understand these entries thus far, and then when you return, we'll obviously continue. So I'll see you guys straight after this break. Welcome back, guys. Right, let's continue with this calculation, raw materials used. Right, so at this point in time, remember, I've mentioned this already, I've calculated the value of raw materials available. So in other words, if I add up the amounts that I've just entered on the debit side, that gives me the total value available. I now need to obviously try to calculate from what I have available, how much did I use? In other words, what is my direct material cost? Remember, that means the amount of raw materials we used. So let's quickly add up these amounts first. Okay, so let's move that. Right, so at the beginning of the year, my opening stock, 4036.50 plus 990,000, that was my purchase, plus 85,000, that was for carriage, plus 20,900, this is the dye from France, and then the tax, 1,045. So the total value of stock available to use, 1,500,595. Okay, so let's just enter that in. All right, let's now carry on with the calculation. Still trying to work out how much have or did I use. Right, so I'm now going to look at my closing balance. So in other words, at the end of the financial year, how much of raw materials were not used by the business. So pay attention now to my terminology. How much of raw materials did we not use? What was my closing stock? So raw material, closing stock, 464,000. But remember, there is additional information given with regards to closing stock. So for now, 464,000, let's just take that through to our answer sheet. Okay, 400. So I've got a closing balance. I'm just going to write down here balance carried down in brackets 464,000. And let's now go to the next bit of additional information. Okay, which affects my closing stock. During the physical stock taking of raw materials on the 28th of Feb 2015, end of the year, so obviously closing stock, a calculation error was made. 10,000 articles costing 80 cents each were calculated at 8 Rand each on the stock list. And then they're asking you to correct the error. Note, the dye purchased from France was taken into account during the stock take, so I don't have to worry about the previous adjustment. Right, very, very important, guys. You're probably thinking, but hang on, I often get correction of errors with bank recon or creditors recon. What is it now doing in manufacturing? Now remember, guys, this is a year-end adjustment. You came across this in grade 10. Year-end adjustments, often there are errors that could be made. And remember, as an accountant, you need to pick up these errors and correct the errors. So an error can take place in any area of the books. So in this case, it happened at the end of the financial year in terms of stock taking. So let's firstly identify the error before we go about correcting the error. Remember, you need to know what went wrong before you actually fix the actual issue. Right, so I've got stock 10,000, okay, the number of units, 10,000 stock items that costed 80 cents each. So the correct value is 80 cents. By mistake, it was calculated at 8 Rand each. So in other words, 10,000 Rand times 8. So I have shown a value of stock items at 80,000, which is obviously incorrect. It should have been shown at 10,000 times 80 cents or 0,8. Okay, so let's just put that in. Right, 0,8, which obviously refers to your 80 cents. Okay, I'm just going to take that out. So let's just work that out. That should be 8,000, but let's just make sure that we're correct. So 10,000 times 80 cents, okay, and that should give us 8,000, which is the correct value. Right, so immediately, can you see that I have overstated the value of this stock items? Overstated, I've written too much. So how much did I overstate this by? So let's get the calculator out again. So something that is entered as 80,000 should be 8,000. So I've overstated my stock figure by 72,000. Okay, 72,000. I'm overstating. I've overstated, sorry, not I am. I have already overstated the stock figure by 72,000. So how do I fix that? So let's go to our answer sheet. Okay, so in this figure, there's 72,000 too much of stock. So obviously to fix that, I must remove the 72,000. Okay, correction of error. You've done this before, not necessarily with manufacturing, but here's an example. Right, so let's now work out what is the value of my closing stock, the actual value of closing stock. So 464,000 minus the error of 72,000, and the correct closing stock, 392,000. So 392,000. Okay, right, so immediately now, guys, okay, so how much of stock did I use? So remember, this is the amount of stock available. This is the stock that was not used. So obviously, if I take 1,500,595 minus my closing stock, 392,000, that's going to give me the figure of stock that I've used. Okay, so let's do that. Let's get the calculator out. So, okay, so 1,500,000. Right, minus my closing stock figure, which is 392. Right, and that gives me the value of stock that I did use, 11,085,95. Okay, right, took a bit of time because there was quite a bit happening in this particular question, but hopefully you guys understood this. Right, let's move on. Okay, the next calculation, consumable stores or indirect materials that were used by the business. So once again, you can choose to do a ledger account or you can choose to show a calculation. So let's do a calculation instead of a ledger account. I've done the ledger account already. So how am I going to go about calculating my consumable stores or the indirect materials that were used? I'm going to put up a formula, and hopefully this formula, you've used this before, hopefully it makes sense. So I'm going to start off with my opening balance of consumables at the beginning of the year. I'm then going to add any purchases of consumables during the year. I'm going to add any carriage on purchases, minus any returns, if I returned indirect materials, and I'm going to minus closing stock, and that would then give me the amount of indirect materials that I've used. Okay, straightforward calculation. Right, let's go to opening stock. So at the beginning of the year, okay, so there's my opening balance. So my consumable stores stock at the beginning of the year, 10,600. So let's take that through. Okay, 10,600. Right, now let's look at purchases of indirect materials during the year. So we're going to get that information from my transactions for the year. Okay, so there we go. Purchase of consumable stores for the factory, 57,200. So 57,200. Okay, then carriage on purchases, I don't think there's any. Okay, but we can obviously double check. So if I go through my transactions, there's only carriage on raw materials, not indirect materials. So there's no carriage. Okay, so back to that equation or the formula that I put up. Right, so there's obviously no carriage. Returns. So did we return any indirect material? So if I go to my summary of transactions, okay, on the fourth line, return of consumable stores. So for some reason, we returned 5,200 Rand worth of consumables. So immediately, returns is going to decrease the amount of consumable stores you have. So minus 5,200. And then finally, closing stock. Okay, what is my closing stock at the end of the year? So again, back to my information, right? Consumable stores, my closing balance, 22,400. Okay, so 22,400. Okay, so minus 22,400. Right, now you would have noticed I haven't gone through the additional information because remember earlier on, I read through the additional information. I didn't come across any indirect material adjustment. Okay, we can obviously double check, we can quickly check. So as you can see, nothing affected indirect material. So that is why I haven't looked at additional information. Right, so I've got my equation. So let's now calculate how much of consumable stores were used. Okay, so if I get my calculator out, just bring this down. Okay, so let's move that. Right, so my opening stock, 10,600, plus what I bought, 57,200, minus what I've returned, 5,200, and then finally minus my closing balance or what I did not use, so minus 22,400, and that will give me the value of consumable stores that the business did use, 40,200. Okay. Right, let's move on. Our next question relates to VAT. So I want you guys to pay careful attention to this part of the question. Calculate the amount of VAT the business will be able to claim for February's water and electricity. So remember, guys, earlier during this year, we touched on VAT. I think we spent 2 lessons on value-added tax, and we came across the concept input VAT. So because a business is, or often a business who is a registered VAT vendor, they can claim input VAT that they pay for services or products that they purchase for business use. So in this case, the business paid the February's water and electricity account, or the February's water and electricity account was given to the business, and they now want you to calculate the VAT that the business can claim, or the input VAT that the business can claim on this water and electricity account. Right, so let's calculate the input VAT amount. So let's go to the actual adjustment. Okay, so I'm looking for the adjustment on water and electricity. There we go. Right, an amount of 27,360, including VAT, was still outstanding for February 2015. Right, so remember guys, including VAT means this amount as a percentage is 114%. 100% without VAT plus the 14% gives you the amount including VAT. So in order for me to calculate the VAT that we can claim, okay, I'm not going to go to my answer book because I've got the info in front of me. I'm going to take 27,360 times, I want the VAT amount, so times 14, divided by I have a percentage of 114, so divided by 114, and that will give me the amount of VAT I can claim, which in this case is 3,360. Okay, not difficult. 3,360 is the VAT, the input VAT that the business can claim. So let's just quickly record that in our answer sheet. Okay, so the answer would be 3,360. Okay, just very quickly, so I took the amount that was given to me and I then multiplied this by, I want the VAT amount, so I want 14 divided by I have 114. Okay. Right, time for us to take another quick break, and when you guys come back, we'll then move on to the 2 ledger accounts that was required in this particular question. So I'll see you guys straight after this break. Welcome back, guys. Let's carry on with the question. Right, the 2 ledger accounts that we're going to be completing, it's the last part of the question, work in progress stock and factory overhead costs. So I want to start off with factory overhead costs because without this ledger being completed, I am unable to complete the work in progress stock. So let's start off with factory overhead cost. Now again, a reminder, because this is supposed to obviously be revision and you guys should be aware of concepts, but just in case you've forgotten, factory overhead cost refers to all your indirect cost that relates to manufacturing. Okay, so remember, if you've forgotten your terminology, please make sure you go through this before you actually attempt exercises on manufacturing. What do we mean by factory overhead costs? All the indirect expenses relating to the manufacturing process. So what was the water and electricity used by the factory? What was the salary paid to the factory foreman? What was the insurance premium for the factory itself, and so on? Right, so factory overhead costs, let's start off with items that we've come across already that should go into this ledger account. So at the end of Feb, okay, the first item that we've already calculated was the indirect materials that the business used this financial year. So we've already done the calculation. So let's go to the calculation so we can transfer that amount to this ledger account. Right, so indirect materials used, 40,200. So I'm going to take that through to my ledger. Okay, 40,200. Right, then the next item that I also want to include, because I've already come across the adjustment, is water and electricity. Now here, guys, I want you to be very, very careful. Water and electricity, I've just gone through the adjustment with you. I'm going to go through it one more time. Remember, the figure that was given to me includes VAT. But when I show this figure in my factory overhead costs, I need to show the figure excluding VAT. In other words, I must remove the amount of VAT from the particular water and electricity amount that was given to me. Right, so water and electricity, let's go back to the adjustment, and the account including VAT was given at Okay, so including VAT was given at 27,360. The VAT amount was calculated at 3,360. So excluding VAT means 27,360 minus the 3,360 will give us the expense without the VAT. Okay, very, very important that you remember this. Right, so let's do the calculation. So water and electricity, 27,360 minus the VAT portion, 3,360 to give us 24,000. So without VAT, my water and electricity amounts to 24,000, and this is the amount I'm now going to use in my factory overhead note or ledger account, 24,000. So let's enter that amount, 24,000. Okay, 24,000. Okay, right. Now let's move on to other expenses relating to the factory. So we're going to start with the summary of transactions, bearing in mind that I've already entered 2. Okay, so summary of transactions. Right, consumables entered already. Right, purchase of cleaning material for the office. Now remember, the office has absolutely nothing to do with the factory. I think you guys remember this diagram that I drew for you earlier on during the year. Okay, this is our factory. This is our office where the admin takes place, and this is our warehouse where the sales and distribution takes place. So we are only interested in the factory, what is happening here. Okay, so any cleaning materials used for the office is not going to be shown in my factory overheads account. Right, purchase of factory equipment. This is important because this is going to help us in terms of depreciation. But if we look at the information, it was purchased on the 28th of Feb 2015. So immediately the purchase of equipment, or the depreciation rather, has no bearing on this financial year. It was purchased on the last day, so there's no depreciation for me to include in this financial year. Right, production wages obviously affects direct labor. Okay, so I'm going to come to that later on. The next bit is important. So the salary that the factory foreman received, 180,000. So this bit here is important. Okay, so 180,000, let's take that through and then we'll look at if there is additional information. Okay, so my ledger account, so salary for the factory foreman, 180,000. Or you can call this indirect labor, that's also correct. There was an adjustment to this. So I'm going to go to the adjustment itself. Okay, so the information given. The senior accountant discovered that the accountant forgot to take into account the UIF contribution and the pension contribution made by the business for the month of February 2015. The business contributions were as follows. Right, so we are interested in the factory foreman. UIF and pension contributions amounted to 2,340. So this was obviously left out. We now need to include this figure, 2,340. So let's do that. Okay, right, plus 2,340. Okay, can you show this separately? The answer is yes, because if you show this as pension contributions, pension and UIF contributions, you're showing the expense separately, it will still be marked correct. I'm showing this under salary, or you can also call this indirect labor, which is absolutely correct. Right, so the total amount that I should show should be an amount of 182,340. Okay, right, next expense. Okay, so my next expense, so I've dealt with the factory foreman, salary of the admin staff, again admin, nothing to do with the factory, so I'm going to ignore this bit of information. Now let's look at insurance. So they're not specifying, is this insurance for the factory? Is this insurance for the warehouse? Is this insurance for the office? So I now need to look at my additional information before I take anything through to the factory overhead ledger account. Right, so thus far 17,400. Let's go to the next page. Okay, so in terms of insurance, okay, so there we go. 70% of the total amount of insurance is for the factory. Right, so the total that was given to us, okay, can't remember the amount, I think it was 17,400, okay. So that amount given to us, 17,400. Okay, so 17,400, right? 70% is for the factory, so we are only interested in the expense belonging to the factory. So let's work out 70% of the cost. Okay, 17,400 times 70%, and the expense relating to the factory, 12,180. So let's take that through, 12,180. I want to write the amount first, 12,180, and obviously this affects insurance. Right, again guys, a reminder, show your calculation in brackets, or if you do not have space to show your calculation in brackets, then make sure you make a little note or have a little key where you can actually show your calculation. So in the event of you getting the amount incorrect, the marker or the examiner can always go through your answer sheet and give you part marks for your calculation. Okay. Right, so insurance done and dusted. Let's see whether there are other expenses relating to the factory. Right, so we completed insurance. So there's one on water and electricity, and there's sundry expense. So let's look at water and electricity first. I think we've dealt with this already, but I forgot to include the total water and electricity, 285,200. We dealt with the adjustment. So let me just take this through, 285,200. Okay, so that was a mistake on my part, 285,200. Okay, so the amount that I've got here, 24,000, was the adjustment amount plus the 285,200. Okay, so let's just quickly fix that because that was an error that I obviously made. So I'm just going to take that out. Right, and the correct amount would be, okay, the 24,000, remember, was the adjustment figure. Okay, so the balance of the previous month, because remember 24,000 was only for the month of February, you've got to show for the entire year. So 285,200 plus 24,000, and my expense for water and electricity for the entire year, 309,200. Okay, so again, show your calculation in brackets. Right. Let's move on. There's one more expense, I think. So it was sundry expenses. Let's just go back to the slide. Okay, right. So your sundry expense in brackets relating to the factory, 205,000. But remember, there could be additional information. So let's just quickly check. So for now, 205,000. I don't think there is, but let's just quickly check. Oh, there we go, there is. So included in the sundry factory expense is a deposit paid for the hire of special machinery, 5,000 Rand. Okay, so remember the figure was 205,000. That was your sundry expenses. But in this figure, there's a deposit amount of 5,000. Now remember guys, a deposit is not considered as an expense because when you pay a deposit, provided in this case it's for machinery, provided you return the machinery in the condition that you got the machinery in, you will then receive your deposit back. You're going to get your deposit back. So my expense, 205,000, I need to obviously take out the deposit because that's not an expense, that's an asset. And remember, factory overheads, you only show expenses under factory overheads. So my sundry expense is an amount of 200,000 without the deposit. Right, so let's take that through, 200,000 under factory overheads. Okay, so 200,000, and this is obviously sundry expenses that relates to the factory. Could be repairs or whatever the case may be. Okay, right, now there were two more adjustments that could impact on this account. We don't have much time left. I'm going to quickly read through the adjustment. And if there's a calculation, I'll do the calculation on this page, but remember, it relates to factory overheads. So I think we've dealt with most of this already. Right, the new equipment we've dealt with. Okay, this bit of information here, okay, not dealt with as yet. This was fine. This was absolutely fine. We came across this already. Depreciation on the factory plant and equipment must be brought into account at 10% per annum according to the diminishing balance method. So if we go to our opening balances that were given to us, okay, so we are given factory plant and equipment 1,100,000. That's my accumulated depreciation before the additional depreciation was written off. So in order for me to calculate my depreciation, I'm going to use the space here. I'm going to take my cost minus my accumulated depreciation. Okay, I'm going to then multiply this by 10%, and that will be the expense for depreciation shown in my factory overhead cost account. Okay, right, guys, we've covered quite a lot. We've gone through all the adjustments. I know I haven't got to your work in progress account, but remember, all the calculations are now completed, and it's just a matter of balancing or adding up the factory overheads cost account, not balancing, but you need to obviously add up and close off to work in progress. Unfortunately, time's up, so I can't do much more. From me, it's good luck for the upcoming exams. God bless, and hopefully you guys, you're going to ace that accounting paper. Okay, it's bye-bye for now.